Hey everyone, hope everyone is doing well today. I've been getting some questions regarding some beachfront projects that some of my clients are interested in investing in. And the question comes up, if I buy a nice piece of beachfront that's in a desirable area, for example, something that has road access around Secret Beach, what are the opportunities for cash flow or what does my return on investment look like? Well, you can measure that, 100 different ways. For example, if your primary purpose of buying the property is to use for you and your family and just rent it out through Airbnb or something when you're not there, that's one way to get some ROI. But your main reason for buying is personal use and enjoyment and making those memories with your family. If your interest is just simply a financial return, then you might consider just buying the beachfront property with cash, holding it for a bit till the appreciation goes up in the area, and then selling it with seller financing. Or if you were to build on this property, for example, in this scenario here, a sixplex condo project, then one way to make money or to get a good return on an investment is not just to buy the property, build the condos, and sell the condos, right? That you can make a little bit on that, but a good way to make an ongoing revenue stream in something like this is to retain the hotel tax license. So let me just explain briefly what this means. So for example, many of the resorts that you see on Ambergris Caye, the big resorts, I'm talking like the Grand Caribs, the Cocoa Beaches, the Belizean Shores, things like that. What those developers did is they built large resorts. They sold off almost every single condo. In some cases, every single condo has been sold to a third party. 1 bedroom, 2 bedrooms, 3 bedrooms, doesn't matter. So the developer came in, built all the condos, sold all the condos, but in many of the cases, he retained the hotel tax license. Now, what does that mean? Well, in Belize, each resort or complex is granted a single hotel tax license. And so that means all of the rentals have to legally go through that company, that one company. So for example, if you were to buy a piece of beachfront property on the East Coast or West Coast, a nice piece that you could build 6 condos on. So imagine a 3-story building. So you have 2 condos per floor. So maybe 1 2-bedroom units with a nice pool out front, places for them to park their golf carts, maybe overlooking the bay or overlooking the ocean. But let's say you built a sixplex condo project, you sold all 6, or maybe you sold 5 and kept 1. But then you exercised your right as the property developer to keep or retain the hotel tax license for the property. This means that all of the rentals for each of those condos would have to go through your company. So here's the way it would work. And I'm using very conservative nightly rates and very conservative occupancy rates on this just to make a point. So for example, if you got $200 per night on average for a 1 or 2 bedroom condo on the beach, for example, North Secret Beach, and that rented 50% of the time, that's 15 nights per month, or $3,000 per month gross income per unit. So you take the 3,000 times 6, that's $18,000 gross rental income for the building. Now, typically in Belize, there will be a split between the owners of the homes or the owners of the condos and the management company, the person that handles the rentals, right? Now, that split can change depending on what's included in the split. For example, you might go into one project and they might have numbers that say our split is a 60-40, okay? But what does that really mean? What is the management company doing for their 40%? What are they responsible for? And what do the owners get in return for their 60%? What are they doing for that money? And also, what does it cover? For example, some places on the island, they'll go with a 75-25 split or an 80-20. But what is that split? Is it taken from the gross? Is it taken from the gross minus certain expenses? In some cases, the hotel tax, the person that holds the hotel tax license will work with the owners of the condos or homes. So for example, it might be a 60-40 split if the management company brings the renter, or it could be something like a 70-30 or a 75-25 if the owner of the condo himself or herself were to advertise on Airbnb and get the place rented. So this number here, don't get caught up so much on what the split is. because if everyone is making money, at the end of the day, it doesn't matter what those numbers are. I'll do a 50-50 split if the management company can rent my place, say 75% or 80% occupancy, and they're making me my money and there's no headache, right? So you got to take a look at that. But let's say for this example that we went with a 60-40 split for argument's sake. The owners get 10-8, the management company gets 72. And again, these are gross numbers. Now, out of the 7,200 per month, the management company would then be responsible for things like marketing, advertising the units, maybe putting the units up on Airbnb, doing the check-in and check-outs, right? Handling the clients who are on site, perhaps the housekeeping and things like that. So there's different things there that they would do. So imagine that that would all run them $2,200 a month. I think that's a pretty good budget for a sixplex. I mean, you can do a lot of Facebook advertising, you can give a lot of discounts, with that as well. For example, you can give a 7-night discount or throw in an 8th night free or something like that. So because you have some money here to do that with. So now imagine the management company is getting $5,000 per month net, right? That's after all expenses times 12. That's $60,000 US per year. Now you can live on Ambergris Caye pretty good at $60,000 a year, right? Because remember, your unit here, let's say you decided to keep one of the units. So you built a sixplex, you kept the 5th one, but let's say you say, you know what? I'm not even going to live in it. I'll go and rent somewhere. Why would you do that? Well, first of all, if you did live on site, then you could take care of everything yourself. But if you took that $3,000 per month, right, that you're getting for your unit at 50% occupancy, you can go and rent something for, say, $1,000, $1,200, $1,250 in a different part of the island, and just keep your whole building just as your moneymaker. So imagine if you paid up to $1,500 a month in rent. You're still getting another $1,500 a month that you can use toward food and expenses. So that's a pretty good income. Plus, would be a little bit less here because I'm putting that in the mix, but plus the 60 grand. So imagine now if you ran it properly and you developed a nice property with a good reputation. So this 50% occupancy now goes up. Maybe it's 55, 60. Maybe your nightly rate goes up a bit, right? So those are all sorts of things you can do if you're good at this. But I just give this as an example to show someone if they're thinking of building a multi-unit complex. So for example, a duplex, a fourplex, a sixplex on a single beachfront lot, or maybe 2 side-by-side lots off the beach. This is a good something important to look at. All right. So I hope this is helpful today, guys. I know, there's a lot of numbers coming at you, but if this is something you want to talk about more, and you have an idea you want to run by me, go ahead, shoot me the information, shoot me an email, say, Dennis, here's what I'm looking at doing. What do you think? Does my numbers make sense? Am I missing anything here? And then we can go from there. All right. Thanks a lot, guys. Have a great day, and we'll talk to you soon.